I want to bring in Scott Bauer, CEO, Prosper Trading Academy, to help set up the action for today. Scott, when you think about where we are, we're closing out April very different than where we started. The S&P 500 off now just about 1% for the month. And think about how the bears really had the reins at the beginning of this month. How do you kind of encapsulate what this month has been?
I think if we look back, Diane, I think most people, myself included, we can probably give a really big sigh of relief compared to where we were 4 weeks ago. However, the overriding theme of the news flow and what has driven this market really hasn't changed. So I think the risks are still there, both for the upside and the downside. In that, the tariff narrative is going to drive this market. Sure, we've got the big guys reporting today, tomorrow, and that certainly is going to affect the markets. But the bottom line is, once we turn that clock tomorrow into May, the selling may go away. There's something to that. I'm not ascribing to that at all this year, because it's still all going to be tariff talk.
Yeah, so I was going to ask you that if that's really what needs to come next, because although there's clearly indications from the White House that there's a trade deal coming, we still don't have one yet. So
Right.
In terms of the bulls continuing to have control, is it really about what we get on that front?
It is. And I don't think the Bulls have control. And I don't think the Bulls will have control even if we do get that first or second deal, unless it's with a Japan or a China or something absolutely major. So, I'm not sure the market is buying into as much anymore, any of the news that there's a deal out there, until we see the goods. Now, once we see the goods, that can completely change the narrative. But, my concern is that much of the damage has already been done in terms of the pipeline, in terms of supply chains that we haven't seen yet. And that's going to be, rolling out over the next month, 6 weeks, 8 weeks or so. So I think it's okay to be very cautiously optimistic here. We're not out of the woods.
Okay, speaking of we're not out of the woods, crude oil now below $60 a barrel when we're looking at WTI. What does that tell you about the kind of read on the economic picture, and what levels are you paying attention to on oil?
It tells me exactly what all these confidence numbers have been saying over the last several weeks. And we got one from the conference board yesterday, that consumers are scared. Consumers are not spending, and they're not driving as much. The bottom line is the demand is not there right now. So from a macroeconomic picture, the outlook is probably not great. But again, one or two major deals here, Diane, and that can change the whole narrative. And it's not necessarily what those deals are. It's just that those deals are made, because we know that the market does not like uncertainty, just like a stock does not, like uncertainty going into earnings. And then once that news is released, that lets out some of the pressure here. And once people know what we're really dealing with at whatever level, that should make things calm down quite a bit.
No, you make a great point about the consumer, because one of the things that had been a pattern with consumer sentiment, if we say, for instance, go back to last year, and you see some weakening consumer sentiment, but it didn't necessarily play out in actions. And whereas, I'm going to get into in a moment some more detail with our Jenny Horn about Starbucks results. So you're starting to see some weakness when it comes to these very consumer-facing companies.
Sure.
But I'm curious to know, in terms of the price action and other asset classes, what you're paying attention to, whether we're talking about the dollar, which is still below 100. It's made some recovery, but not the same kind of recovery we've seen in terms of equities or even bonds.
Yeah, I'm really watching the bond market here. And, we're down again this morning. We're trading, 410, 411, I think, or so this morning. And is that really going to wind up being a good thing for the markets? We all want to see those lower rates, but are we down there now because, yes, the economy really is on its heels, because there really are some issues, or, what is pushing that? And obviously we'll hear more from the Fed next week, but I'm really watching those bond yields. And if we tip below 4% right now, which again, a few weeks ago, everybody was cheering for that, I'm not so sure that's really a positive for the market.
Okay, not sure that's a positive. And really quickly, in terms of this, since you mentioned the macro picture, what data point matters the most today to you? Is it GDP? Is it PCE? Is it even the ADP numbers?
Not ADP. I think PCE is really huge, especially with the Fed meeting next week. And I think we want to see the continuation that inflation has at least not risen. If we see that, because the expectation is, that we are going to see inflation rising over the next several weeks, months, just due to the tariff issue, that's a really good point for the economy.
All right. We will have to leave our conversation there. That's Scott Bauer, head of Prosper Trading
Thanks,
Academy.